This is Thursday, December 19th, 2024. The current time is 5:39 a.m. Eastern Standard Time. I woke up at 2 o'clock this morning, and if I woke up then on a 30-minute time frame, I would have been bullish. On the 5-minute time frame, I would have been bullish. I'm sure on the 1-minute time frame, I would have been bullish also. It's come into some resistance yesterday's, or what should have been yesterday's low, or at least a algorithmic spot where they start purchasing. That's what it's moved back up to. So technically right now, if they want to continue staying bearish, then they should start shorting in more higher numbers. And on the 1 minute, 1 day chart, which I think I went over this last night, the statistical mean from the Anchor VWAP has made perfect resistance so far. That doesn't mean it's it. I mean, this is the bottom of the average daily range, so it should technically go up. But it has less chance of going down after that cluster mess from yesterday at the FOMC. But yesterday at the FOMC, which is Tuesday, I was accurate in what I thought would be the lower end where algorithms would buy into, and about the middle way point where algorithms would sell into. Being accurate 2 days in a row is always difficult. But it did try to get back up to that lower level yesterday, and it just couldn't. Well, if it made perfect support, then it'd be better to look into for possible very good bounce. But it didn't make perfect resistance. Or support. It showed up as being just nothing but sell volume all through there. I mean, pretty much nothing but sell volume. I don't know, it kind of tried here. Nothing's mostly buy, but it didn't outpace the previous one, so it's more difficult to bounce if you're not outpacing. But it did try to make a little bit of a bounce here. I know I've already went over all of that. And this 25, 97, 60 level, that's from several days ago, what I thought could possibly be support. And that's over the course of the last several days, that was the lowest level I had mapped off, I believe, anyway. I mean, I really don't know if I become biased towards my own stuff, and I just see levels where I had mapped off, and then I'm like, hey, for whatever reason, blah, 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 that happened. But I don't know if I labeled all of these and took the couple of seconds to do that, then it'd probably help me out in the future. But regardless, last night I was definitely more long biased than short biased again, because it's just so damn low. The statistical levels from the Anchor VWAP has moved. I think this was like exactly -3 deviation yesterday evening. Now it looks like it's not anywhere near -3 deviation from the Anchor VWAP. 0% level down here is where it was at. Maybe, I don't know. Anyway, maybe that's why the math works out. I think it does. Well, like a lower statistical level may be purchased into. I haven't really looked at mobile. I know mobile, it's very good sometimes at showing potential reversals. But on the 5-minute chart, I think it did show reversal here, or definitely in these probably 15 or 20 minutes worth of candles. It showed potential for reversal. But again, that this level should have been, if it was a normal day. It sucks to have FOMCs and then trying to see new charts the next day and all that, overreaction play back out to the upside and then it more self-regulates again. It's a whole lot more difficult. Next week is Christmas week, so it's it'll probably be slower, but the movement should be a little bit easier, especially on the 5-minute chart on mobile. I think if I have any time next week, during those off days where the market is open or futures, and I'm just going to trade off 5-minute chart on mobile and try to make me a little bit of Christmas money. But what should have been support yesterday is kind of becoming resistance right now. It's still showing to me it's still bullish right now. This is why you can't predict anything. You can only say these are the levels that I'm looking at, and once it gets into those levels, then I can make a decision at that time. To me right now, it's not wise to think about taking a heavy short. It is wise to think more on the long side than short side. But what it might tag today is anyone's guess. I mean, right now it's at 2 statistical levels that is the median weight level, so or a high level that it possibly can get to, and then a middleweight level. That's what I should have said. But I guess if people actually had on their chart what I have, I mean, a lot of people know about the volume weighted average price. This one is an anchored one. Some days it lines up with the actual VWAP, and some days it does not. But right now, like I said, it's still showing up as being bullish. And it's not wise to think short right now because it's just not a whole lot of algorithms or whatever taking heavy amounts of profit or shorting because it's too high. It's just not how it is. So, predicting what it might do today is a little bit more difficult. It's already above the level that I thought it. The math anyway. Like again, what sucks is yesterday on FOMC day. FOMC day is going to be a much larger overreaction in either direction than what's typical. So again, it needs to self-regulate and get back to a median level or an average level. That's what it needs to do, and I think right now you're kind of at that level. So that should have been the goal for a lot of algorithms, is to get up to here. Now where they'll target, I don't know. They're probably just going to wait until levels line up to potentially start shorting. And if they really, really want to start shorting, it'll be if they want to wait for a higher level, then it's 2681.30. Then also the top of the average daily range is about 2700. So that's your two levels coming up, and positive 3 deviation from the anchor VWAP right now is at 2694. So these levels here are what many algorithms don't want to keep purchasing past. And on the flip side, there's algorithms that just buy into the buy volume. If it, like right now, on this 1 minute time frame, for whatever reason, you've had a lot of volume in the day. At least that's what it shows up to me. Yeah, that one was a whole lot of volume in the past 1 minute, and that's all buy volume. So buys beget buys beget buys. So the powerful move that it's in right now is going to continue until algorithms see it as possibly flipping. Then they stop buying, possibly start shorting, and possibly start selling. And right now it's just not showing that, because that last minute was massive comparatively. It's buy volume. So you don't want to go against that. You want to wait until you see an actual confirmation to possibly start shorting. But anyway, I digress. I don't know where I'd want to. The way I want to do it every day, if I can actually trade every once in a while, is just whatever I think the high statistical probability level is, like 2700 right now at the top of the average daily range. And Then whenever that time comes around, then plus 3 deviation will be up here, probably even higher, depending on how quickly or slowly that this actually gets up to that, if it does happen today. And then that's where I could actually consider taking a short position. Other algorithms that have held all the way through this, it would be foolish to keep purchasing past that level. That's the way I see it. And in the last minute, you've had mostly sell volume, so potential for rejection right now. That outpaced the previous one, and then whenever this 1 minute closes here in 8 seconds, then it will confirm that that one was mostly sell volume, and then this should start into more neutral or downward trajectory. Unless they want to squeeze you, which I've seen that happen too. But right now, it definitely shows up as being neutral / downward. And that's how you read the damn market. And I was just glancing at it while ago, and it didn't take much to actually see that potential for rejection. But again, like even though I've seen that, I don't want to take a position here because you're at a median level and you're at a low level. And you're at another, what should have been a low level. So that all tells me that, you're at, I'll remove that one. You're at what should have been a low level, a median level, and another low level. So to me, it's not bright to take a short, but if you want to scalp or whatever, then that'd be the better opportunity to scalp and short. And you have to be very prepared to either, if it goes against you, then you got to close your position out and possibly lose. On a statistical basis, the reason why people that follow math and statistics do not gamble is because gambling is inherently the stupidest thing you can possibly do. The reason I don't take many or any positions a lot of the time is because statistically, even though I can be right to the penny a lot, I'm not right to the penny all the time. If I was, I wouldn't make any videos. I wouldn't document this. I'd just make me a couple $1 billion or trillions of dollars, be the world's first trillionaire, and then just flood the market with something, and just I don't know. Anyway, again, that was kind of easy to see, and I'm going to see that. I just that's not the trading that I prefer to do. I want to have high statistical probabilities, and again, if I had a high statistical probability, if it happened to come down to 0% level at 25.85, then I'd have much higher statistical probability of being correct. And I already know, since yesterday was FOMC day, that that really screwed me up yesterday. It just didn't have a high probability of going down anymore. And being right on this one is difficult because you're already at a lower level than what it typically should be. If FOMC wasn't yesterday, then you'd take all those movements out of the market and you'd regulate it. You'd probably be, and statistically speaking, then you'd probably regulate it out to be where it's at right now. That's where it should be right now. So since it's at where it should be, then it's not wise to take a position. If it wants to continue to stay bearish, then yes, right now probably is a good spot to actually take a short position, because that's your halfway level, and halfway levels are either going to reject or go up. It's really kind of comical and kind of that simple, and I see it so much of the time. And again, I should have took a short one ago. And you see a top or whatever coming in where you're like, damn it, I should have took a short there. I could have made $600 right there. Off one contract. I'm pretty sure it's $600. It's $100 for every $1 move. I believe. Let's see here. Yeah, 10 cents is $10. $15,180 is what you need in your margin account to be able to trade one contract. And so $6 would be $600. Yeah. Now you're at the 200 moving average. Now there's algorithms that are going to take some profit because they've seen that sell volume coming in or whatever. Yeah, $650. See, just like that, you'd be up $650. Because that was one of the easier ones to tell. Just because. But again, like at 200 moving average, there are several algorithms that will take profit there. Again, like, you can either be happy with the profit for the day or try to stick to it and stick to your position, stick to your thesis or whatever. Or you can take guaranteed profit. And if it's me in that moment, I'd take guaranteed profit at 200 moving average. And there are algorithms that do that. And you can see it right there. And it happens pretty regularly. And the buys aren't outpacing the previous sells, so I don't know if you add the last 2 minutes together, maybe. And again, the 200 moving average is there. But yeah, I would have took profit there. If it's me. If I was already up $650 on the day, I would have took profit. And there's algorithms that take profit here, then they say, hey, nobody's shorting anymore, let's buy into it. So you could flip your position there and then, went up for whatever. And just like that, that's how easy it is to see what the hell happens in the markets, and you just see it time again. And nobody believes you, and nobody cares, or nobody's like amazed that, how easily some dumb redneck from North Carolina can kind of gauge this stuff. And that scares the ever-living hell out of me. But you can see how it works. The shorts take profit. They already know that it's on a statistical level where it shouldn't be heavily shorted. If I could actually have like more information, and I'd be able to have if I don't know how to put it. If I had like some organizations like a thought process on how they're going to buy or sell or whatever, or market makers maybe, then I'd be able to tell better too. Yeah, that's at my regular job. That's like a whole lot more than what I make in an entire 10-hour shift. And it was literally like, 6 minutes to make way more than what I make in a day. Unless I'm on overtime. No, even if I was on overtime, that'd be, and taxes. Taxes are different on capital gains and stuff too. Well, it's based off your actual income, not just the capital gains. It's not like you're taxed at 60% level on, if you made $500 in the stock market. It's based off your total income. Now you're at the non-moving average. Non-moving average made resistance, and it's just trying to crawl down. You're not getting hardly any volume now. So whoever's in charge, which has been the longs for a long time, getting the shorts to take over in a substantial way is a little bit more difficult. 200 moving average did get purchased up, so you're at it. To me, it's not wise to take a position, and I hate to say that. And I wish every single movement in the whole market I could be like, yeah, it's worth a buy or sell at this level here. Like this lines up perfectly. Like I can give you example after example after example though of why it's important to take a position, or if you can be in and out of position without much slippage. Slippage is worse. If you're going to be in a position, out of position, and like it's trading at exactly the same spot it was at, then you're still losing $10 every single time you get into a position or out of a position. So $20 loss every single time you enter or exit a position. And if you see it, potentially going up, and then you're like, hey, I need to go long here. No, I need to cancel my position. Now I need to go long. Now I can short. Now I can long. If you're doing that, then you're going to definitely lose your ass. That's why you need a higher statistical level to get into or get out of. But whenever, not like this break here, for instance, like, I don't know what, I think that's -1 deviation from the anchored VWAP, maybe. I don't know, anyway. But once the price action gets above the 9-moving average, then you can think about going long. Once Trendicator and Mobius volume waves start to show up as being more positive, then you can be more positive also. And once they start rejecting or start turning, like at 145, then you can think about going short. But that thinking about going short didn't never pan out to be anything major. Then you have to flip your position here, because that's when it starts showing up as being potential for being bullish again. And you get above the 9-moving average with more volume and stuff, and more buy volume, and then like the Mobius volume waves and the Trendicator both are showing favorable bullish action, and you can just keep on piling into your position. You stayed above the 9-moving average here, then you start breaking down here with a high nothing but sell volume candle at 2:36 in the morning. That's when you initiate a short potential, and then it comes down to the 50 moving average. 50 moving average holds up, and then you go back up, and there's a whole lot of like small little things that you can do if you're in the right place in the right time to catch them all. But then, for instance, like, if you're trading in any of this right here, then you're like, hey, that's a really good buy volume there, and like, everything's lining up, and like it flushes. You're like, damn it. But in hindsight, you can do it, all day long. Be like, yeah, this is exactly what you should have done here. Then, like right here, you're chopped. You're chopped. You're chopped. You're chopped. You need to just back the hell off, because you're going to do nothing but lose on fees. That's all you're going to do. But if you react to a higher movement, like this one here, where it made a new high in pre-market, then you can be like, hey, it's showing up as a big sell volume candle there, and so I can short now. So then you can make $650 relatively quickly whenever it comes out to 200 moving average, and it starts showing up as being potential for a reversal to the upside. Then you just stop. That's what you concentrate on. That's what you can make money on, and that's how you can do well in markets. But all through here, like, I would have thought. I wouldn't have thought much of anything through any of this. I swear I would. But again, when I was actually looking at it live, that's when I was like, hey, that's a good amount of buy volume, and about half the buy volume. And, they're tapering it off, and there's a bunch of sell volume, so you short. And you short, and then you scalp it. And that's, because literally like 556 and then 555, it showed up as being, you need to stop your short, because there's not anybody else shorting. There's not any more sales there. Well, technically at 555, 554 is when they technically start, but it didn't outpace the previous one. But those two together did outpace the previous one, so then you had to stop your short position. You just have to. But all through here, like, all that's chop. You could probably argue that this dip here was kind of significant enough, but there's still not any buy volume to justify getting into long here. I mean, it's not showing any heavy sell pressure, so you can think about it staying long. And then once it gets to the volume weighted average pricing, you probably need to cut your position too. So there are plenty of moves that you can make money on. And I'd much rather just concentrate on one stock or futures or whatever every single month. It's funny that I called CRM pretty damn close. I never had looked at CRM before earnings. This past earnings. And I mapped it off exactly what it'd do. I mean, exactly. Before it happened. That's fairly significant. I said 378.50. It didn't quite reach it. It was 378.16 was in pre-market high. The thing that sucks about that is, like in pre-market, you cannot take a options position. So even if you did want to short that high, then you cannot. You'd have to have actual shares. You'd have to short shares. And you'd have to have a massive, massive, massive amount of money in your margin account to be able to do that. And, there's plenty of entities that do have that type of capital. They can take that type of short position or sell exactly up there. They bought it into here and sold it into there, and that's what kind of regulates the markets. And at least that's my 2 cents worth. And GameStop is definitely very, very, very manipulated. Yeah, it was on this day right here that morning. For some reason, my alert didn't go off. I had an alert at exactly the 0% level for GameStop before earnings, and that was the low, most recent low. And the 50% level is usually gravitational point. Whether it goes above and beyond it, it's anyone's damn guess. It always is, but usually, that's a much better entry. And you just have to figure out where to take profit at. And that would have been not quite double your money. Almost. Whatever you put into it if you bought it down here. And if you held on to it for long enough. So if you had $15,000 position, you had $30,000. So. But the one reason why I look at futures and try to do my math on it every day is because it's a whole lot quicker than waiting for GameStop to turn around and go up. There's a whole lot more suckers involved into this than there is into like gold, for instance, or in S&P 500. There's way more suckers involved in that than on GameStop. I'm not sure on that 5 minute on mobile if it's shown up as. It probably showed up as being a short 2-line go. I could probably tell you real quick. Let me pull up my phone. I know this is a long ass video. I know nobody's gonna watch it, but this is sort of therapeutic for me to get words out instead of just being all by myself, alone in my head with my thoughts and my feelings and all that good stuff. So. No, on the 5 minute chart line, it didn't show up anything. So it was 100% neutral. So since this high was neutral on the 5 minute chart, then that shit tells me that, it's anyone's game. Whoever wanted to control it could control it there. And the shorts came on fairly strong and they decided to take over. Again, 200 moving average is where I would have took profit on my short, and right now it's neutral again. So you got to wait for that move up or down or whatever. And this wasn't a massive down move because of previous price action. So it's not like it's a place it's never been before. So it's going to be more neutral right now. You just have to wait for a higher or lower price entry. Yeah, this is kind of cathartic, just talking to yourself and into the ether of the world. Into YouTube, into the Exodus, into the black hole of information